So much for sell in May and go away, as SPY was up over 5% this month. Let's go. Remember that as we start to dig into SPY monthly first. The first thing we notice on this page is that May, typically a seasonally weak time period for the markets, reversed the reversal from April. April was down 4%, and while May was up over 5%. We'll also look at the weekly in a bit, but from a monthly perspective, this is super bullish, as we held the 5 exponential moving average and are pressing up against the upper Bollinger Band once again. There's really nothing different to see from a monthly moving average perspective, as all the moving averages are stacked to the bull side, as it's pretty much been that way for months now. And if we look at the MACD on the bottom of the chart and we focus on the histogram, it looks like we gained back a little momentum. Flipping over to the weekly, as the monthly right now is screaming bullish, what is the weekly telling us? Well, for starters, this is what you call a hanging man candle. And hanging man candles, when they occur at the top of range, they tend to be bearish, as it signals that buyers are losing control and there is significant selling at this price level. Pair this with the doji from last week, and this is signaling that we're ready to make a potential reversal. Whenever I see a hanging man candle occur at the top of range, it doesn't exactly give me a warm and fuzzy feeling. Now, the thing about dojis and hanging man candles are they need confirmation, and we didn't get that this week as we move sideways. The question next week, with jobs, and more jobs on the docket, is will we get it next week? But let's face it, if we just focus on the fundamentals, we are starting to get many reports that the consumer is weakening, like we saw with the Chicago PMI that checked in at 36.4. Or many retail businesses are giving poor guides, or reports that consumers are trading down, meaning going to Walmart instead of Target. And if we have a weak consumer with a PCE that really hasn't moved in months, are we really getting what you call stagflation? Getting back to the weekly, even though this does have a hanging man look, if you look at this green line here, you'll see that we did spike and close above that 5 exponential moving average, which is bullish. But I know I'm talking sense here, but this MACD was not able to close above the signal. Could we be running into something that we ran into last September? Well, whatever the next move is, we can see here that this upper Bollinger Band has been essentially moving sideways and the lower one has been squeezing. So as these Bollinger Bands squeeze, this is telling us that the next move will certainly be an impulsive one. And if we look at a heat map of all the S&P 500 stocks, what we see here is that software got absolutely crushed. All of a sudden, is AI losing its luster, as software companies that couldn't stop talking about AI have not delivered, and as a result, they're getting wrecked. Couple this with chips that have pumped. Is it maybe time to cool off a bit? If we look at a weekly ratio of the NASDAQ to the S&P 500, we see that this week may be pointing to that, as we have a reversal. But if we look at the percentage of stocks trading above their 20-day moving average, this is signaling that after dropping into the mid-20s, this tail candle is showing us that we have completely reversed, and maybe we're getting ready to start improving market breadth like we've kind of seen out of these other tail candles in the past. Well, that's all I have for now until the next video, and we'll see you then.